Now I'm going to talk about the latest market news and events. Let's get started. First, the stock market closed sharply lower today as investors were spooked by rising Treasury yields and geopolitical uncertainties. The S&P 500 fell by 1.3%, the Nasdaq Composite by 1.6%, and the Dow Jones Industrial Average by 1%. The 10-year Treasury yield hit a new cycle high of 4.90%, up 6 basis points, and the 2-year yield rose to 5.22%. And these higher yields reflect the market's expectation of higher inflation and tighter monetary policy in the future, which could hurt corporate earnings and consumer spending. Second, geopolitical tensions escalated after a summit between President Biden and Middle East leaders was canceled in the wake of a hospital bombing in Gaza, causing hundreds of fatalities. This development increased the market's negative bias as it raised the risk of a wider regional conflict and disrupted air travel and oil supply. United Airlines shares dropped by 9.7% after the company warned of a Q4 profit decline due to higher costs and uncertainties arising from the Israel-Hamas conflict. Similarly, Morgan Stanley saw a 6.8% decrease in its shares following disappointing results from its wealth management division. Third, in political news, Representative Jim Jordan lost a second vote for the Speaker of the House, adding to the prevailing uncertainties. Jordan, a conservative hardliner, failed to win over enough Republicans who were concerned about his image and tactics. The House remains paralyzed as Republicans struggle to agree on any member to serve as Speaker. This could have implications for the fiscal policy and budget negotiations in the coming months. In economic data, U.S. single-family home building rebounded in September, boosted by demand for new construction amid an acute housing shortage. But the highest mortgage rates in nearly 23 years could slow momentum and delay. In tech news, the U.S. tightened its rules on AI chip sales to China, affecting major chip makers such as Nvidia and AMD. The new rules aim to limit China's access to advanced processors that could be used for military purposes or supercomputing. Nvidia said it will not be able to export 2 of its AI chips, H800 and A800, to China, its second largest market. This could cost Nvidia some $400 million in lost sales for this third quarter and interrupt some production that happens in China. AMD also said it will comply with the new regulations, which could impact its revenue growth. The US sanctions have also sparked a booming black market for Nvidia AI chips in China, where prices have soared up to many times their original value. Looking ahead to Thursday, the economic data releases, including weekly initial claims, October Philadelphia Fed survey, September existing home sales, and September leading indicators. That's all for today's market update. Thank you for watching, and don't forget to subscribe to my channel for more financial insights and analysis. See you next time.